Hello team, welcome to the another session of Certified Information Security Manager. We are going to understand what is risk identification. This is part of domain 2, which is risk information risk management. That is domain 2 of CISM review manual book. Okay, so we are going to understand what is risk identification in detail. All right. So hope you are able to see the screen now. Okay, so the very first topic is risk identification. In the subsequent video we are going to cover what is risk assessment, what do you understand by risk response and mitigation, how we are going to monitor and control, and so on, right? So that's how we are covering the complete risk management, information risk management life cycle, right? You can post your question in the chat box. I will keep updating. I will keep watching this chat box in my another device and will answer you immediately in case you have any doubt. Okay, so the risk management life cycle is something I really need you to know in depth, both for your day-to-day job practice and as well as for your exam, because this is something which is very important. It is such an integral part of what we do as an IT security professional. Alright, so let's start out with this very simple equation: risk is equal to threat into vulnerability. I have explained this in very detail in another video. You can find the detail in the description, where I mention how risk, definition of risk is when threat coupled with vulnerability is risk. If there is only threat and no vulnerability, then risk is not there. If there is only vulnerability or there is no threat, then again there is no risk. Risk only comes when there is threat coupled with vulnerability. Alright, so hope you have understood this definition. You can watch, you can find the link in the description where I have explained in greater detail with some good examples as well, right? So if we have the vulnerability and there is no threat, well, then there is no risk. And if there is threat but no vulnerability, again there is no risk. But need to be, so for risk both need to be present. There must be threat and there must be vulnerability. And vulnerability is just some sort of weakness in one of our application. Okay, our infrastructure or somewhere else is our layer defense is just a weakness. Now if no one can exploit that weakness, it doesn't matter it's really have. Okay, there has to be a threat, which means that vulnerability is exploitable and then it is exploited by a threat actor. We are going to spend a little more time here because it is so integral to everything what we do. It is important for our job and it is important for the CISM certification as well. Most of the IT security, as you know, is an iterative process. This is no different. We go through the full cycle and then we start over. We are never done because both our environment and the threat landscape is fluid. It is always evolving. We might add new systems, new servers, change our network infrastructure and new application, change old ones. So for everything we have, we go through the risk management life cycle. And the one we looking at today has 4 phases. We might know or have read about it. Once they have 3 or 5 or 6 phases for the exam. That doesn't really mean, or that doesn't really matter. You are not going to get a question on phases. 3 is what, 2 is what, or 5 is what. What you are going to get the question on it is the situational based question. We have done this, we have done that, like that. What do we do next, or what do we do first? What is the best response in this situation? Since what we do, the order we do it in, and when we do it is the same in any of them. We need to understand the flow, what is done, when, and how it is done. But it doesn't matter, it is in the phase 2 or phase 4. So now you are clear on why and the how. Let's look at the phases. Phase 1 is risk identification. Obviously, we need to know that there is a risk. Then we need to do a risk assessment. How bad is the risk? What are the potential impacts? Then go to risk response and mitigation. How do we when to react to that particular risk? What can do it to mitigate the risk that are big enough? And then the final phase, risk and control monitoring and reporting. As mentioned, this is iterative. That is also why it has little arrow, then go in circle. In this lecture we will cover risk identification. In later lecture we will cover the other 3 phases for risk identification. If you are familiar with project management methodology and life cycle, then you know in the first phase, initiation, that is where we identify our team. We find the team member that we need from across the enterprise. If our scope is too narrow, we don't involve enough stakeholder, then we might miss some big risk, which is why we need someone from entire enterprise and someone who is allowed to make decision. We should not be okay with them just sending someone random from the team, because they have to if they send someone over who's not completely clear on their processes and don't completely understand what they do. Well, then how they are going to help us identifying risk? Let's say all that work out. Well, we have our team assembled. Then we need to figure out for this risk assessment what is in scope. Just like we do with project management, what is in scope is just as important as what is out of scope, what we are doing this risk assessment for. Is it for a single department or is it for entire enterprises? What type of asset are we looking at? What type of threat we have? Having that completely clear defined scope is going to help us be successful. If the scope is too vague, well, then how do we know that we are done? How do we know what we are actually trying to achieve? Once we have the scope, then we need to figure out which method are we going to use for risk assessment. This could be qualitative or quantitative risk analysis or both, and we will cover those in a later lecture. And for their name, you can probably guess what they are. Qualitative, it's quality, and quality is subjective. It's your opinion. It's not a hard substantiate fact, and that is why we do. First, we rate all the asset we have on how critical they are, how bad is it to if we are compromised, and then we rate the likeliness. Once we have that, then we move into quantitative risk analysis, and here also we can hear quantity. It is a number. If in our qualitative risk analysis the number were high enough, then we can go in and put number on those feelings. This will take a lot of work, since a lot of what is involved. This is not something we do on all asset. Just like anything else, we need to find the right balance. After that, we pick the tool that we want to use. What are we going to use to analyze the risk what we have? There is a great deal of amazing tool that we can use. And of course, here you use your due diligence. You do the research and you find exactly the right tool that actually matches the need of your environment and your enterprise. Since this is a perfect world, we obviously have senior management opinion. They think the process and what we are doing is great idea and something that the enterprise need. Then we need to very clearly understand what are acceptable risk level. What kind of risk appetite does our organization have, which is remember set by senior management. If you are in an organization that has done 50 times, well, then they probably have all the rights processes in place. They have identified all their assets. If all assets are not identified or they are just not sure, well, then you will spend a good deal of time identifying asset. And this is so critical. Why? Because if we don't know we have it, how can we protect it? Assets are both tangible and non tangible. Any tangible just means something you can physically touch, our equipments, our facility, the physical thing that we need to function as a business. The intangible ones are the ones we cannot touch. This is the data on our system, our trade secrets, our reputations, things you cannot touch. Let's say we are going to do a risk analysis on a server, then we need to figure out how much is it worthy, the physical tangible objects, the server itself, how much did we pay for it, what is going to cost us to get new ones. After we bought it, how much did it take to get it ready for production, what cost was involved, how much time did it take, how important is that server within our business. If the server got stolen, how much would it be worth for a competitor, how much have we spent maintaining and protecting the asset, and are we going to incur any functional losses if server is no longer there. If that server was our e-commerce web server and we now loses $10,000 a day because we cannot do e-commerce well, that's the loss. Then what if the server contains customer data, is it protected well enough? If we lose it, what is going to do us financially if we get fined, and what is going to do to our reputation? Let's say this server get stolen and the encryption on the server was unfortunately not strong enough. We lost tons of customer data, both transaction data and personal identifiable information. Let's say for example we get fined of $100,000, which to you and me might be a lot of money, but if our company makes $100 million a year or is value at once 100 million, well, it is not so much then, but the loss of the server could cost a significant drop in stock price, let's say 20%. If we have valued at $100 million, it dropped 20%, well, then our shareholder just lost $20 million. If in other example where we have $100 million revenue per year, let's say this breach is so bad that 20% of our customer take their business elsewhere, again drop in revenue of $20 million. And this is why it is so critical that we look at the whole picture. Sure, I can go out and buy a new server for $50,000, but I definitely cannot fix the price of our stock or the lost revenue with the $50,000 or 100,000 or a million. So the loss of the asset is not just the asset itself, it's a tangible, the intangible, and everything that comes. What that? Most of the places where I have sorry, but there aren't. No one really know who owned them and how they get there. They were just magically there. So some were really old somewhere new, which means that I spent an incredible amount of hour trying to track down what they do. This was at one of the hospital. Other places you might just have unplugged the cable and see what happened at the hospital. And in a streamlined as well functionality business, this would never have happened, because whenever they were trying to plug something into network port, they should get no access. Before that, they should not even have an access to data center. They should be there should be a data center team or a server team, and not just random analytic that installed their own equipment. And you can hear, I still feel a little bit sore about this. We did manage to find every owner for every system, but it did also give me some 80 hours plus work per week. And within that, let's me move to next lecture, which is identification of IT risk assessment. Hope you are able to understand the importance of risk identification and what's the meaning of or how we can identify the risk, even if we don't have any risk management practice in our organization as well. Please let me know in case you have any doubt. You can mention all your question and queries in chat box, and I will take that and will revert you in the chat box itself. In my next lecture, I will be taking IT risk assessment.